Alright, so we're going to be looking at another example with oil of taking a risk entry and what I sort of look at and how I sort of get to choosing my POIs and then executing the entry. Alright, so obviously what we can see is initially price was moving downwards, and what do we see? We've got these sort of previous lower highs, and price comes in and give us a bull change of character, and then we see this POI over here being mitigated at this point before price pushes up, and then the highest point then again gets broken to give us a bullish record structure on the higher time frame before price comes and sort of mitigates this POI over there again. And then now what we see is price gives us the last sort of break or structure over here, and then when it breaks structure over here, we're obviously waiting for an opportunity to see price come back into any of our POIs to give us a buying opportunity. All right, so which POIs do we have? Let me just delete this which I was doing previously, right? So what we're looking for over here is obviously to see price coming into any one of these H4 POIs, like this one. We've got another one over here. These are all sell candles that appear before we see some buying momentum that continues to the upside, and it's likely that one of them is going to get respected. All right. So we're watching for any one of these candles, but of these POIs. But obviously, what we're going to be doing is we're going to be waiting for price to give us a change of character. So if we're just going to go to the H1 time frame, we can refine these POIs if we wish to, because we're going to be taking risk entry. So we don't want POIs that are too big. So we're going to do that. Over there, we're going to pick this lowest one over here. On this next one, we're going to pick the lowest point again of the higher time frame POI. Remember, we want to focus on the higher time frame POI because it's the one that's more likely to be respected. All right, and then we've got this one also here appearing right there. Okay, now on the H1, obviously we've got other POIs that seem to appear like this one over here. We've got another one over there, but because there are a lot of these POIs, we're going to stick with the ones from our H4 time frame, which we believe will be more likely to be respected. All right, now what are we going to do? Because we know price is going to sell, we know this is a very, very big range. We can't just wait for price, to just tank before. Maybe if it's going to come over here, it's going to be a while whilst we're waiting. So what we're going to wait for is to see if price is going to give us an opportunity to enter the market for sales by giving us a change of character. So on the H1, as we can already see, price is moving up, and we are seeing that the trend is still very much bullish and moving to the upside. Okay, so over here now, we can already see that there is a possible change of character, and you may ask me why. So we're at this trading range over here where price was moving sideways, right? And when price was moving sideways, you can see obviously that we had a buildup of liquidity over here, right? Let's just go to the 15-minute time frame for me to illustrate that. So we had a buildup of liquidity right here, right? Because we had relatively equal lows, and then with price giving us relatively equal highs at this point and this point. Then liquidity was fetched, but what we then see is price then decided to move lower very, very impulsively and fetch out these guys with their stop losses over here, whilst also at the same time showing us a bearish change of character. All right, so this is a sign of a possible trend change. We're going to look at the higher time frame to see if we have any POI that's responsible for causing this. We just move up one time frame, and as we can see, yes, by looking left, we've got this sort of H4 POI where we can expect price to move lower. All right, so price just came into this POI, tapped in, we see a change of character. This is probably a zone from which we can see a reaction that will form the retracement. Then one of our POIs at some point is going to be respected for the continuation move upwards. All right, so what are we trying to do? We're trying to catch a sell entry before we take the buy, because we're selling to buy. All right, so let's just move this POI left to remind us why we are selling, and then obviously let's mark out the POI where we think that price is going to respect. All right, that's sort of the POI that we're looking at right at this high over here, right? And if we're going to be like I would say, then say I use my 50%. If you prefer to use the lower part of the POI, that's certainly up to you. If you prefer to use 25%, then you can use your Fibonacci tool to do that. More than welcome to do so. It's all a matter of preference. All right, so we're going to wait and watch what the market is going to do over here, but we're certainly happy with the momentum that we're seeing and how price has pushed downwards. So for me, I'm going to work on my limit order over there if I'm going to be taking a risk entry, and then because I believe that this is the point where the retracement is starting before it's actually started, I'm anticipating that one of these POIs is going to be respected. So I pull up my discounted premium price tool, then all of a sudden I can see my EQ is here, so I can't be looking for buyers on this POI because it's within premium price. The price is too high to be buying from. It's likely not to be honored. Okay, it's likely not to be honored, right? And then obviously when I look at a point like this one, so this immediate candle from this low over here, and then to this point where price pulled back and then continued higher, we obviously have some sort of imbalance in that region. All right, we also have some imbalance that's lying over there where we know that price could possibly come in to fill that imbalance. All right, so what I'm simply going to be doing is, remember, I'm paying no attention to some of these POIs over here, not because they're not important, but they're too many. If it was in a scenario where I didn't have enough POIs showing themselves, then I would obviously pick the H1 POIs that are appearing. But in this scenario, all I can see are my H4 POIs and tons of H1 POIs. So I'm not going to look at them because there's too many of them, and I would rather go with my H4 POIs. And I'm happy to miss a trade if it turns out that I have to miss that trade simply because it was within one of the internal POIs. Okay, so these sort of 3 POIs are the ones that I'm seeing, which are really good. But what I can already identify over here is that this POI is resting above imbalance. So I would rather just cancel it out and watch for the POIs that are resting below the imbalance, because this imbalance is likely to be filled. Okay, so now we have a good understanding of where exactly price might be coming to, right, as we take our sell entry. So what we're simply going to do now is to wait. And obviously, because we're trading against the higher time frame trend, which is bullish, we want to make sure we are not greedy. For these ones, some of us prefer to take a fixed RR. Maybe you prefer 1 to 3, you prefer 1 to 5. It's something of choice. You have to backtest for yourself. Unfortunately, that's not something that I'm going to give you. You're going to have to put in the work and find something that you're comfortable with, backtest for yourself. But personally, for me, I like the method of using a fixed RR when I'm trading against the trend. Others may prefer to say, I know there's a high probability that this POI is the one that's going to be respected, so I'm going to trade into the imbalance. All right, as we've already told you in previous videos, that you can trade into the imbalance, and this is one of the methods that you can use to do so. All right, if we look over here, I'm not sure whether there is liquidity. Let me just draw a trend line. Let's see. Okay, so over here, as you can connect these points, you can already see there's trend line liquidity that's been built up over here. So the probability that the market is going to fetch all this liquidity before it buys up is good. So if you have a POI or a point where you want to take profit that is below this trend line, you're still fine, right? Because we're just trying to look. It's not like we know what's going to happen, but we're trying to look for a way to build the story up, right? So I haven't forgotten we're talking about entries. I'm just trying to help you to sort of start to see the light on where I'm coming from as I build the story. We're obviously going to go into a few more chart examples in a video to come, where we're going to discuss all of these things and how to put them together, right? So now I've worked on my 50%. If you're the guy for your full on position, you're just simply going to wait for the POI to be triggered. For me, it's over here. I've got a beautiful RR. I believe I can trade into the imbalance. I'm probably not going to let this market reach this entire position. Probably I'm out at the very first zone of demand because I'm trading against the trend. There's no way of being sure, right? So I'm just going to let the market be the market and let it play out. So over here, it respects the trend line and sort of comes in to a POI, triggers, and then bang. Can you see that? So it came to the POI, to the trend line, induced buyers to come in, and the buyers stepped in, came in, and then immediately we saw the market tank. So already we're in for a 1 to 6.8. It's a beautiful momentum trade. Already we can already see that this next low has been shattered. So we've got another bearish break of structure. So we're happy because we know the market is going to continue to pile lower. All right. So the market does exactly that in this. Okay, awesome. So we see price is going to move down, now beginning to respect some certain POI. Let's see. All right, so that's already a change of character when we see this. But what we can already see is price pushed down to around 11, a 1 to 11 trade, straight into the imbalance over here. And before it filled the imbalance, price pushed up. So obviously I don't want to be the one who's holding and letting price come back all this way, That's not going to happen. We're not in the game to be right, we're in the game to make money. But our POI, which we believed price is going to respect, is certainly not triggered yet. And I'm not sure if price is going to come there. Let's just, out of curiosity, maybe we can just play it out and see if the POI then played out later. Let me just increase the speed on the 4 hour. No, so we eventually see a higher high being printed. But I think you get the point already. We've been able to trade at the most for a 1 to 11, and anybody who was able to, who's not greedy, was able to fetch a decent RR somewhere within here by taking a risk entry. All right, so I'm sure there's happiness over here. This POI that was above the imbalance held. Yes, we say normally the POI that's above the imbalance may not hold. In this case, it did. we don't have all the answers in the market, and that is certainly fine because we didn't miss out on the trade. Now imagine if we were waiting just to buy right here and we'd not taken the short, we'd have missed out on the move, because with all of this waiting, the price would have not triggered our POI, and then we wouldn't be in the move. So this POI was validated and turned out to be the right one in this case. If that day you'd missed the imbalance, you definitely would have made money and you would have been in the trade. So you'd have been triggered in another buy position over here and so on and so forth. But obviously, I don't encourage you to think of trading that way or to trade that way. You need to stick to your rules, right? So this one is another lovely example of how to take a risk trade. So we're going to be looking at other trades where maybe we're going to be looking at a confirmation entry trade in the next video. All right. So just hang on as we move on.